Good morning. Again, I thank you all for this opportunity. Today, we'll discuss how to grow your finances in the pandemic. We all know what is currently going on in the world. Indeed, it is very scary time for everyone in every aspect of life. Business owners are struggling, employees are concerned, investors are concerned. So it's quite a difficult time. But through it all, with proper thinking, proper planning, I'm quite sure that we will be able to go through this difficult time together. As we all know, as we all know, COVID-19 that we're talking about today as pandemic was actually declared as pandemic on March 11, 2020. So it's almost getting to a year. And it's almost getting to a year. And this causing a lot of impacts to families, impacts to businesses, communities. Organizations are facing significant challenges. Workforce are being cut down. Operations and supply chains are struggling in terms of how to manage that. Finance and liquidity challenges for businesses, trade regulations, strategies and brand, all these have significant impacts to the global economy and to even our own local or domestic economy. So it is indeed a difficult time for all of us. But you know, one interesting thing that I have learned last few days is I was talking to a friend of mine and I said, listen, 2020 has been a difficult year for me. And he said, no, for him, 2020 was a great year for him. So depending on who you talk to, they can tell you what a year 2020 was. Now, what I'm trying to say is that you may or we may feel that 2020, due to the pandemic, it is a difficult year or it is a bad year. But I can also tell you that it is a year for other businesses or other people to make a lot of money and do well in it. Throughout history, we know that in a year where there are challenges, it also creates a lot of opportunity for people to make a lot of money. Let's just go back a little bit down history, where we look at 2008 financial meltdown. I'm sure we all remember what happened in 2008 when the mortgage collapse in the US, the subprime loans caused a lot of financial challenges in the US and which has affected the entire world. Okay, but one quotation from Warren Buffett, which I think that is very strong during this time, is that he said, be afraid when everybody is greedy, but you should be greedy when everybody is afraid. When difficult times comes and everybody is afraid, you need to look for opportunities to do what? To create wealth. When everybody is greedy and going for things, you need to be careful not to expose yourself. 2008 has created a lot of opportunity for people to make a lot of money and reach their financial freedoms in 28, 29, 2010. People like Warren Buffett, people like Bernanke, all those have made so much money during that period. Again, when you look at issues of just let's look at even COVID-19, this pandemic that we're discussing today. Who would have thought 2 years back, Casa Preco will be making hand sanitizers? But during this difficult time, Kasapreko and other companies are now all making hand sanitizers. Others, companies that otherwise few months ago, seamstress, tailors that don't know anything about face masks, nose masks, are also in. So it's always good when things happen, it creates distractive side of it. It distracts the entire global economy, but it creates a lot more opportunity for people to make a lot of wealth. So today, as we are discussing how to grow your wealth or preserve your finances during pandemic, we will discuss how to manage your present income and earnings. We will build or discuss habits of saving in crisis, and we will also discuss maximizing your investment returns and growing your investments. One of the things that I want you to keep in mind before we proceed is that there is a clear difference between saving and investing. Those are two separate things. If I can just spend a minute to explain what a saving is when you are just keeping your money safely, safekeeping. You are leaving your money with a bank for them to just safely kept that money for you. That is when you are saving. When you are investing, you are using your money to buy financial assets with anticipation that this money will appreciate in value. The value of it will go up for you to sell and make more money. When you look at it, savings, you are saving it, safekeeping, so the risk will be low and the return on it will also be very low. Investing, on the other hand, because you are buying a financial asset which you cannot guarantee whether it will appreciate and what rate it will appreciate, there is an element of risk. A risk that it may not even appreciate at all. A risk that it may depreciate. A risk that you may lose the value, but it also creates opportunity for you that you can also have unlimited gain, unlimited return on your asset or investment. So those are the two that I want, because since we are talking about finance, talking about managing wealth, talking about growing your money in difficult time, you need to understand these two concepts. I know there is another one that is called insurance. Those are all three, but I don't want to go there. Insurance is so different and has nothing to do with savings and investing. Insurance is just that you are protecting yourself during off towards uncertainty. Should anything happen, I know I'm covered. Even though investment does the same thing, should anything happen, your investment, you can go for it. Insurance also protects you for uncertainty. Now, let's look at the 5 top tips for managing your personal finance. Managing your personal finance, the first question you want to ask yourself is, for you to manage your personal finance, you definitely have some finance, or you definitely have some money for you to manage it. You cannot manage zero. You cannot manage what you don't have. Now, it means that you have worked, created some money, you have some, whether a lot or whether small, you have some money. That is why you need to manage. You need what you have. If you can, so we need to look at first of the 5 tips of managing your personal finance will be saving. We all know that it's very important, no matter how small money we make. we need to develop the habit of saving. We need to get to the habit that every penny CD we generate, we must save a percentage of it. One thing I've also learned from Warren Buffett is that he said when you make money, the first thing we should do is to invest first. Because as we know, as human beings as we are, we have unlimited needs and wants. If you don't invest first and you start spending first, you end up spending everything. There is a saying in my dialect that when you have money today, you spend all. If tomorrow you've not gotten anything, then tomorrow itself will find its own thing. But that kind of saying will not work for us. We cannot say that tomorrow, because I will have work to do, or tomorrow I will go to work and work again. So today, when I make money, I need to spend everything. When you go to the Bible, those of us that are Christians, we also know that there is a verb in proverb. I've forgotten the proverb, but I know there is a verse there that tells you the story of ants. Ant is one of the smallest animals, or the smallest animal you can talk of, right? Very tiny, yet they save food for tomorrow. You see them carrying a lot of food because they know there's uncertainty. There is uncertainty. This world that we are in, there is always uncertainty. Who would have thought of coronavirus, COVID-19, that will shut down the entire global system? None. No one have thought about it. No one have seen it. But it came. We are all struggling through it now. So we cannot predict what will happen tomorrow. So we need to get to the habit of saving. When you make money, save at least. If you can, those of us that are Christians, we pay tithes, 10% every month on whatever monies we've made. My cousin pays every week. Whenever he makes money, he pays every week, 10%. It means that if you can pay 10% for tithes, you have 90% that you'll be living on for all these years. It therefore means that you can also pay 10% to yourself every month, and you'll be able to live comfortably on 80%. If that is true, then you can therefore also, as you save, the next point is you move to saving. The money that you are saving, which is well kept, no interest, no risk, you can now begin to move those monies to saving. So the second point is investing. Investing now from the money that you saved goes towards buying financial assets. Financial assets are you buying shares, you are buying corporate bonds, you are buying debentures, you are buying mutual funds, you are buying treasury bills. All of them have various degrees of risk. For that matter, when it comes to investing, I will encourage all of you to seek experts' advice. Get to any of the investment companies in Ghana and contact any of the financial analysts, fund managers, and they will advise you. Echo Capital is one of the investment companies licensed by SEC, and we will be glad to assist you. And there are many others in the country also that you can approach, and they will guide you through this process. The third point that we need to have in mind during this pandemic is retirement. Many people never think about retirement until they get a letter from SNIT that it's almost time for you to go home before they start thinking about retirement. Many people at that point, that's when they started getting new birth sex, changing their date of birth to to drop their date of birth so they can still be at work for the next 1 year or 2 years. Because they are not ready, they are afraid to go on retirement. Retirement is a beautiful thing. It's a time for you to relax and enjoy the quality time you have. I know of a story of a man that has reduced his retirement age at work to the point that his firstborn is even older than him. How can that be? Why would you continue to punish yourself and continue to drop your date of birth, and you always say that you are this age because you want more money, you want to you continue to reduce your date of birth so that you continue to drop your age. As you drop your age, people continue to think that you are young, forgetting that you are old and you need a lot of time to rest. You need time to work on yourself. You need time to 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 develop yourself during your retirement. So retirement is very important. As you do what? You work. You need to start saving towards retirement. A lot of people also retire during this COVID time. Some teachers are afraid of COVID, so they decide to take early retirement. So the question then is, if you are not ready, would you have made that move? So in spite of everything, we need to make retirement huge priority in our lives. Another important saving thing which we need to talk about is borrowing, and that's the fourth one that I want us to discuss. Borrowing is a very important part of our lives. People who have excess are willing to give it to people who don't have. So those of us that don't have need to borrow. But borrowing comes with a cost. Borrowing is not cheap. There is element of it called interest. During this time, I will encourage every one of us to cut down on our borrowing. We need to live within our means, especially borrowings or debts that have very high interest rates. We need to pay them off. It's not a good time to still paying high interest rates to anybody. So one of the ways when you are trying to save money, one of the first things you want to do is to pay off your high interest loans first. You need to pay them off. It does not make sense to me that you are paying interest to someone at a rate of 30%, 35%, and you are investing and buying treasury bill at a rate of 30%. It does not make sense. You must as well pay off that loan and continue to pay the interest to yourself, 30%. So it is very important that you pay off any high interest loan that you have in order to start saving and investing. The fifth point that I want us to discuss, which is also very important, is to control our spending. People buy, especially in pandemic, people are scared. They go and start hauling people. They go and haul things. People say because they'll be locked down, they go and buy a lot of water that they don't need. People said there is going to be a lockdown, so they go and buy a lot of food that they don't need. People go and buy a lot of gari that they don't need. Some end up getting spoiled. People go and load a lot of things that are liability, that are taking money from you. Whereas you could have invested that money for a month and make 3%, 2%, 1% for a month. You've spent it to buy food. You've spent it to buy dress. You spent it to buy something that you don't need now. So we need to control our spending. We need to control our food. For people at home now, they eat a lot more. During the lockdown, I know people complain because during the lockdown, people have eat a lot. People that usually used to have 1 meal a day are now having 6 meal, 4 meals a day. We need to control our consumption because we are in a period of uncertainty. We cannot guarantee what tomorrow. Look, as we sit today, we cannot predict whether there will be another lockdown. We cannot predict whether there will be another shutdown of businesses. We cannot predict whether your incomes that you are generating today will survive. You can live on it for the next 3, 4, 5 months. So it's very important that we look at these 5 top tips of managing our personal finances. Just to recap, savings, investing, retirement contributions, borrowing, spending being the fifth one. We need to keep all those 5 points in mind. So as we manage our personal incomes and earnings, we should all be, first of all, we need not to be panic. We need not to be scared, okay, over the uncertainty of the pandemic. Thank God it's under control. The vaccine is in now. All those things gives a lot of hope. As an investment banker, I've been in this space for the past 18 years. I know that when there's uncertainty, we are concerned, we are afraid, we cannot predict. So it affects our thinking, it affects the way we act. But we need to also know that the solutions that are coming now have given us a bit of comfort, a bit of hope that there is a vaccine coming, there is the virus that is under control, there is face mask, there are things that we can do to be safe. At least few days from now, we can comfortably say that we've survived at least 1 year of the pandemic. To God be the glory. So this is how far God has brought us. And we need to still take note and prevent and protect ourselves because there's still uncertainty. Your income is likely not going to be do what? It's not going to increase. Many companies are cutting down. Many companies are laying off people. So truly, as an employer or as an entrepreneur, also truly, if you are my employees, if you are my employee, you're asking for salary increase, I will feel like you are not concerned for the company because it is indeed a difficult time for all of us to tighten our belts. It is a difficult time for any employer now, but it's also a difficult time for employees also. Employees who want salary increase, they are coming to work risking themselves. They want to be appreciated. But at the same time, as an employer, income levels have also gone down. Any level, revenue level has gone down also. So we need to balance it. It's difficult for employers to also say because the income levels have gone down, I need to lay off employees. Because don't forget, employees are also part of the company now. We have a personal relationship with them. So if you are laying them off, asking them to go home, how will they survive? So we need to all continue to share the small income that comes in so we can all go through this difficult pandemic as one unit. So it's very important that we rethink about our personal expenditures. Overconsumption is very bad. People are now at home, so they are spending a lot of money on internet, data. They are buying data because they are bored. They are watching a lot of things on the net. Before you realize, you need to do analysis on your budget. So one key important thing for every family to do is to create a budget and stick to that budget. We need to stick to the budget and make sure that we are always in line with our expenditures. That's why I said earlier that it's good that we first invest or save our monies, because when you save or invest first, whatever you have left for consumption, once it's done, it's done. But if you decide to consume first, you end up consuming everything. And always remember that retirement, retirement, retirement. Again, this pandemic has taught us that we can all decide to retire any day. And truly, assuming we are all ready and we know we can comfortable enjoy our retirement, I'm sure many of us today will opt out for retirement. But because we are all not ready, in spite of the pandemic, in spite of the uncertainty, we are still all running, going for our various jobs. So they should give us a wake-up call that we need to make allocation of our earnings towards retirement now and now. If you are someone here that is not about retirement, or you think you are too young, so you have enough time, I'm sorry to disappoint you. You need to start saving and investing for retirement today. There are 4 ways to increase your financial health. Your financial health is very important. So let's quickly look at the 4 ways that you can increase your financial health. Your financial health can also, somebody can also say that your financial independence. Your independence. You need to be independent. The independent is just like when Ghana gained independent, you are on your own. You have peace of mind. You are not worried about anything. If you don't have financial independence, even toothache can kill you. If you don't have financial independence, that's when you are driving your car and you have a flat tire, you use your leg to hit the tire and get upset. It's not because you are upset, it's because there's no money to fix it. At times, someone was telling me a story that at times you see someone, when they tell you that someone of yours or is dead, see the person crying. It's some people, it's not because they are crying because of the person that is dead. They are crying about the financial pressure that is coming. So it is very important for us to understand that financial health is equally important to our human health, because financial health gives you good health as a person also. So it is therefore important for us to create budgets. Household budget is the key to our financial health. It is wise to have a monthly spending plan, whether your income recently changed or not. You know, the funny thing is that time when our income goes up, then our spending goes up. Okay, right now, when we are not doing too well, we are in a single room. Once the income increase, we say we need the hall a chamber, one room for guests. When you are in the hall a chamber, you are not getting guests. So why are you now saying that there is a guest coming? We need to stick to our budget. Now we are broke, we are not doing so well. You are somewhere around Dodowa. Once you get your money, say you are moving to airport. If it's not bad or if it's not broken, don't fix it. Let's stick to our budget and be happy with what we have. The second one is to continue to contribute towards your retirement. Retirement is very important because you need to use your money and start saving towards retirement. The third one is emergency savings. Emergency savings is very, very important. Just like we are in the pandemic now, this is an emergency. It is an emergency. The question you should ask yourself now is, should everything shut down for the next 6 months? Can you survive? If you can answer this question to yourself, then congratulations, you are good to go. Should Ghana shut down for 6 months, no job, no businesses will open up, can you depend on your emergency finances for the next 6 months. Should you be fired today from your work, can you survive for the next? And don't forget, Ghana, when you lost your job, on average, it takes you about 3 to 6 months to get another job. So we need to save enough money in our emergency savings account, which should be liquid. When I say liquid, it means that that asset that you buy should be able to be converted to cash within few hours or a day or two. You cannot use your emergency funding to go and buy land. You can have land, but you'll be hungry because you cannot sell land quickly. The fourth point is you will need to refinance all your loans. During this period, rates usually goes down. In pandemic, rates usually goes down. Every pandemic, every crisis, every meltdown. Why? Because governments all over the world want to keep the economy going. Because governments all over the world wants the economy still to be going, they drop rates. When they drop rates, they want to entice people to borrow. When they borrow, then they can spend or they can invest into businesses. So when the rates are low, consult your lenders so that they can refinance your loans with cheaper loans so you can pay off the high interest ones, and that can give you a lot of savings. For instance, if you are paying 30% a year, now with the treasury bill rate around 13, 14%, lending rate around 20, 23, if you're able to get a new loan at the rate of 23% and you are paying off the old loan at 30%, you now have a gap of 7% that you can save for something else. Or you can save that towards your retirement or save that for your financial health value. So on this note, I want us to look at the summary points on the saving crisis during crisis that we just discussed. Don't forget the pandemic is crisis. It's a crisis now that we are looking at. These are crises that we are looking at. We have a crisis in our hands that governments are trying to figure it out. We employees are trying to figure it out. We employees are trying to figure it out. So we are all in this together. So we need to save and protect ourselves and our families from this. The summary point is that we need to start small and be consistent with our savings habits. People will tell you that, Stella, I don't make enough money. Stella, what I'm being paid is too small. I can't survive on it. Small drops of water makes mighty ocean. You can start by just, as you are able to pay, again, I've said it, many of us paying tithes 10% on the small monies that we make. And we have been living on the 90% for all these years. Even mid-month, when we are broke, how many of us have the guts to go to our religious leaders, our pastors, our elders, and said, Pastor, I'm broke this month. So can you please give me part of the 10% that I gave to you last month? No, we don't do that. So therefore, if we are able to take 10% and invest for ourselves, we can comfortably save and increase our financial health. The second summary point I want us to keep in mind is to create a budget and establish a saving plan. Establish a saving plan. If you are in a home, where you have double income, it will not be a bad idea to just spend one of the income and save the other person's income. Assuming husband and wife working, can try and save wife's income and just spend husband's income. That would not be a bad idea, provided we can all do it. One other thing I just want to take, just this one, just on the high side. I was also told that anything that you practice consistently for 7 weeks or more, it becomes part of you. Any habit you do consistently for a number of weeks, months, become part of you. So once we put this into practice and do it for a number of months, will become part of us and we stick to that. The third point is to establish emergency account. Emergency account. Approach any of the fund managers, investment analysts, they will guide you through this process. Do not be greedy at this point. This time is not a good time to be chasing high yield, high return days, 10% a month here. Those are too risky. You need to be mindful that the higher the risk, any risk that is high, it gives you very high returns. So if anybody is promising you very high returns, it means that that investment product is risky. And you want to avoid it as much as possible. If you are going to invest into anything very risky, you need to do asset allocation. And that is something that we investment bankers can guide you through that process. You should look at a percentage of your investment, your percentage of your money that can be exposed to such a risky investment product. Emergency funds or emergency accounts will not and should not go and take any risk. It should be liquid. It should be in a commercial paper. It should be in a fixed deposit. Now they call it fixed deposit. In the US, they call it certificate of deposit. That's what I'm trying to say. Certificate of deposit or fixed deposit with a bank that is regulated by Bank of Ghana, that you can guarantee that is a good bank. That money should be with them. Investment bankers can help you with that process and manage that for you. Then gradually, the fifth point I want us to keep in mind is gradually pay off the debts, loans that we have. We need to pay those off because, again, I said earlier, it doesn't make sense paying loan with an interest rate of 35% to anybody, whilst you can actually pay off that loan and save that interest element for yourself. So you can buy treasury bill at 13%, 14%, whilst you have a loan that you are servicing that you are paying 30%. It does not make sense. So we need to pay off our debts. If possible, that should be the first thing we should do before start saving and investing. Apply, and the last point that I want you to keep in mind is applied investment advice that best suits your financial situations. Our financial situations vary. Our financial needs vary. Our priorities vary. So any client that comes to me, the first thing I want to understand from you is your financial objective. What works for you? What is your objective? What are you investing towards? We all have different plans. We all have different ideas for our retirement. People want to retire and still be in Accra. People want to retire and move back to the village. People want to retire and travel along all over the world. People want to invest to build a house. People want to invest and build a second house. People want to invest and buy a dream car. These are all objectives which varies. and your situation varies also. So we need to all understand that. That is why we need to also meet and discuss this on one-on-one, because we are all talking about this very thing that we are discussing now. We are all listening to me, and all of us are all different ages. So we can all assume that we all retire at the same time. What is important to you now at your age is different from what is important to me at my age now. So we need to meet and discuss all this. So the key most important thing is always seek financial advice from investment bankers, from professionals, people who you can guarantee that will give you the best advice. And you should learn to ask questions. One of the things I've learned since I have moved back to Ghana for the past 9 years is that many Ghanaians do not ask questions. They ask just based on one single point. The rate is good. Once the rate is good, you don't ask any further questions. That is why for the past years, we've seen a lot of issues. We've seen a lot of challenges where people's monies have locked up, where people's hard-earned monies have locked up because they were driven by the rate. They did not ask any questions. They have not actually made any analysis. So they went in and put in their hard-earned monies into investment products that have not yielded anything for them. So we are moving on, and my final keynote is that you should always look out for extra income. We all have hobbies, and many people are doing what they actually don't like, but they are making money. But you can also make money from your hobby. Things that you think is just a hobby, you can actually do it and generate some money. You are a banker, but you like doing hair. So you do it for your friends for free. No, you can charge some small money for that. That becomes additional income for you. You are a banker, but you like selling. You can sell dress weekend and go around. Now people are making a lot of money in the US shopping for people. Old people that cannot go, people go and just shop for them and deliver to them. Because of the pandemic, they go to their houses, they take their list and go out and shop and come and deliver it and make money off it. You can do that also individually. Ensure that you are well diversified. Your investment is well diversified. You do not expose all your eggs. Don't put all your eggs in one basket. The funny thing I heard is that they said, look, you can put them in one basket, but you make sure that you boil them. So that when you boil the eggs and you put them in one basket and it falls, it will not crack. But the point then is that the reason why you say don't put all your eggs in one basket is that when the eggs are not boiled and they are in one basket, if you crash, everything breaks. But if it's in different baskets, you have the choice. If you want to cook one, you can cook it. If you want to fry it, you can fry it. But if you boil everything in one basket and you fall, it can crack, but you don't have a variety. So we need to learn to diversify and make sure that you don't expose unnecessarily to one investment product. Take the right amount of risk. If the thing is too good to be true, it's obviously too good. No, it's obvious. Once your gut tells you that this is too good to be true, then you need to pause and recount. And then it is possible to consider partnership to minimize your cost and maximize your profit. A lot of us in Ghana do not understand partnership and do not believe in partnership. So we want to do it all by ourselves. So we take the risk all by ourselves. So should anything happen, it affects you alone. One key point that I've learned over my entrepreneur career is that 100% of 1,000 company, a company that is worth 1,000 cedis, is still 1,000 cedis. So you have a company that is worth 1,000 cedis and you have 100% of it, you're only having 1,000 cedis. But you have a 10% of $1 million company, is a lot of money. So you'd go to Fidelity Bank, for instance, you could see a lot of shareholders. And even some of the funders of the bank have less than 5% of the bank. So you need to diversify your risk, form partnership, people you get along with, people you understand. One of the ways is find people you understand, you get along with, and form partnership to save the cost and maximize your profits. And then think long term. We need to always think long term. Our short term things have been affecting us for far too long. We see them in every aspect of our Ghanaian lives. Okay, our politicians, our government are constructing roads for short term, so they construct the road 1 month time, potholes. We citizens too, we make money, we chop it, we don't think about tomorrow. So it has affected our thinking and the way we perform and act. We need to begin to think long term. Let me start investing 10 Ghana every month for the next 20 years. Let me start investing 20 Ghana every for the next. Those long term thinking helps you. And before you realize, this long term that we're talking about comes before you know it. Who would have thought that just few years ago we were talking about the year 2000? Now we are in 2020. When I was young, we were talking about Agenda 2020. We are now in 2021. So there's a lot of opportunities in thinking long term. And you don't put a lot of pressure on yourself when you think long term. Always seek investment advice from experts. There are a lot of investment experts in town. Unfortunately, many people don't know, and many people don't ask, and many people don't look. Funny thing is that a lot of people don't know about investment bankers. Usually, when I tell people that I'm an investment banker, they say, "What is investment banker?" People only know about the commercial bankers or retail bankers. They don't know about investment bankers. Perhaps it's our fault. We are also not out there. So we need also to do a lot more. But at all times, anything about investment, please seek advice. Analyze it and make sure that the return makes sense. The paid back time makes sense. The net present value makes sense before you invest in this. At times you invest, you don't even know your real returns. But when you take our inflation, the inflation from Ghana, when you take it from your return, it gives you the real return that you actually made. At times people invest, they don't even know they are getting the same inflation rate. So in that sense, we are making zero returns. So we need to get expert advice which can guide you through all this process. So at the end of the day, your financial health will be top notch. And stop borrowing. If borrowing will not be invested in profitable ventures, it's perfectly right if you borrow to invest in a business that will give you more money. But it's wrong when you borrow to spend. When you borrow to spend, when you borrow to buy food, when you borrow to buy things that are liability. Liability are things that takes money from you. Assets are things that give you money. So it's not all cars that we buy are assets. Some of the cars that we buy are liability. So we need to make sure that we understand. And anything we do, the first question we should ask ourselves, is it an asset or liability? What is assets? Asset is things that put money in your pocket. Liability are anything that put money, that takes money from your pocket. So think about this. If you are going to buy a car that will only work 3 days in a month and 5 days or 4 days in the rest of the days is in the shop, it's taking money for it, it's a liability, and you need to avoid it. And we should learn to invest wisely. How do you invest wisely? Through expert advice. Don't forget, it's very important to invest and invest for your old age. But retirement will come. And when it comes, do not put your hope, your future on your children. Because you will disagree with me, but I'll say it. Your children are not your retirement package. They are your children. They need to be independent. They need to make money for themselves, and they are also their children and their family. Taking care of them is not an investment. Taking care of your children is not an investment in the children. That's why when they grow old and they are not taking care of you, then you start cursing them. When they grow old, you are not taking care of them, then you are disappointed. When they grow old, then you expect that if they don't send you money to take care of your medical bills, then you die. Then you blame them that they're not taking care of you. They also have responsibilities. Just like now, we are paying school fees for our kids. We have to take care of our children. So as you take care of your children, you take care of your home, you need to also make provision for your old age, for your future, for your retirement. I thank you all for listening to me.